Week. Let's ask Rick Heitzmann. He is FirstMark Capital's founder and partner. I mean, that's good to see you. That is the question. What do you think about that?
Partially true. I think the AI trade is going to continue to go. It's taken a little bit of a breather, but I think as we've talked about before, we're in a moment where things are getting sorted out. So the companies that are really implementing AI and driving ROI are getting rewarded, and we've seen that so far. And the companies who are just increasing expenses without a real case study to show for it, like Meta, we're getting punished.
It's interesting you raise that issue. Yes. As sort of close as you are to what actually happens in yes. technology. You think that is the real issue with Meta? The expenses are going up, like we've seen this movie before,
yep.
right? And we're kind of wondering what the end game is going to be with them more so than some of the other hyperscalers?
Much more so. I mean, because you think about Google and Gemini, there's a natural product extension that makes a lot of fundamental sense for them. You even think about Oracle and investing in the infrastructure, or even the ServiceNow, where they have a clear ROI, they have a clear product expansion into their enterprise customer base, whereas Meta isn't as clear. They want to participate, so they might be spending to catch up as opposed to drive immediate ROI.
What do you make of, we showed this chart and we list the amount of money being raised in the debt market. Seema
yes.
was on earlier
yes.
talking about yet another raise for Oracle on top of what's already been from a lot of others. What do you make of that? You concerned about it at all?
Well, it's starting to sound a little bit like, the late 90s.
It is.
And we've talked about that before, where, you're starting to exhaust the equity, you're going to debt, you're not going to capitulate, instead you're doubling down against maybe not even a strong hand in certain cases. But I think difference this time around, these guys are still generating so much cash flow in their core business that will enable them to continue to play and not bail out for a long time.
Well, that's why even as we've seen, the hyperscaler spreads
yes.
widen a little bit. I mean, what are you talking like, I don't know, 75 to 80 basis points. There's not a lot of alarm because of exactly what you said. They have pristine balance sheets. They're, resilient.
Producing a lot of cash.
Companies.
They're becoming more efficient. Even Meta, which is on the edge of that group, is becoming more efficient in terms of revenue per employee, profit per employee. They're implementing some AI to get some benefit on the customer service and side. So the businesses are running pretty well. It's just the capital expense, and what's the return on that?
Do you feel like something's fundamentally changed about the way investors are going to view earnings? Like if you look at, let's say, Palantir had great earnings, AMD had good earnings, Qualcomm had good earnings. Obviously, the stock reaction wouldn't have you believe that, but it was in fact the case. Now, you obviously have a different valuation equation than you do for Palantir relative to the others, but the market seems to be punishing companies unless you really knock the ball not only out of the, over the fence, but you got to get it, Ohtani style.
Oh, no, that's the expectation is everyone's Ohtani because you're paying them like you're paying Ohtani. And you're paying them so much, the valuation is so high, you're almost expecting perfection and a two-way player that you have to show revenue growth and earnings growth in terms of pitching and hitting. And you also have to be efficient. So to be able to thread that needle is very, very difficult. And even though Palantir beats earnings, are they beating it enough given where that valuation is?
Let me turn you to a topic that I think is getting a lot of interest and a lot of excitement, prediction markets.
Yes.
You took DraftKings. You were early there, right?
Yes.
Okay. So they're talking about, that's coming soon.
Yep.
How much is that shaking up companies like that and just the space in general?
I think it's shaking up a lot because it's much more broad, right? You're thinking about the New York mayoral race, or you're thinking about how long the government shut down. I'm constantly looking at it because I think there's also an implied wisdom of crowds to those markets. They've proven to be pretty accurate over time and pretty efficient. So I'm interested in it not only as someone who wants to see what the outcomes are, but hey, what is the wisdom of crowds? So DraftKings participating. They made an acquisition to get into that market. I think that sports betting is somewhat limited in that you need to really have licenses, you need to be regulated. That's going to be there, but I think it's one of those things that once the genie's out of the bottle, regulators are going to be chasing down prediction markets. I think that's definitely a wave of the future. I wish we had been in on Kalshi or Polymarket earlier and seen that happen.